as we do, let's get to the stock of the day. One of the big takeaways from the CBA result today is the close attention the bank is paying to a waning of consumer discretionary spending. So the CEO, Matt Comyn, saying, we are closely monitoring the impact of the consumer discretionary pullback in spend. So you could be forgiven by thinking that today's stock of the day is CBA. It is not, but it is related. I've picked Levisa. Why? Well, because Macquarie has given it a very hefty downgrade today to neutral from outperform, so the rating slashed, and it's also slashed its price target by 38% to $22. They say that caution is warranted, even though it is trading below its pre-COVID sales multiple. At a discount to that, I should say. They are saying that you've got to be cautious. They say that weakening consumer sentiment at home and overseas will pressure sales into fiscal 2024. It's trading at about 19 times two-year forward earnings compared with the 24 times prior to the pandemic, but clearly a cautionary note being sounded by the team at Macquarie. So here's the thing, guys. Lavisa has consistently been rated as, buy from many market analysts, even though we've seen a lot of changing sentiment toward the other retailers, saying that Lavisa's got the store rollout, it's got exposure to the global market. They're little treats. I don't have mine in today, but little things that people will still spend money on even during an economic downturn. But this note from Macquarie throws a bit of cold water on that. Henry, Levisa, buy, hold, or sell?
Well, I was quite keen on Lovisa, and I'd say this is a hold after that downgrade, I've got to say. I was scratching my head, I've got to say. I've read the report, and the report has a wonderful picture of a Lovisa store at a lunchtime on a Friday. Now, I don't know about you, but my typical Lovisa customer is not out and about at lunchtime on Pitt Street on a Friday. They're more out and about at the weekend. Nadine, you would obviously be far more expert than me in terms of young girls and Lovisa products, and even somewhat older people in Lovisa stores as well. So you probably have more of a handle on this one. But $35 to $22 was their downgrade. I've got to say, I don't know where they plucked the $35 from back in April. That does seem a little bit jousting sticks to me, and a little bit dreaming, to say the least. And really their argument is that consumer spending is slowing down. Well, we know that. And having a picture of an empty store on a Friday lunchtime to back up your research in Pitt Street. Oh, actually, no, it was in QVB store after lunch on Friday, the 16th of June. Not a single person in there. Yeah, that's obviously part of it. I think this one, for me, is still a hold. I think, we know that the consumer is slowing down. We've seen that, but Matt Comyn this morning was alert but not alarmed, that's for sure. And we have seen other retailers suggesting that as well. But we saw, Myers' results or preview results guidance was pretty okay. I don't have a problem with this one here. I think Macquarie is jumping at shadows a bit. I'm sure I'm going to end up with egg on my face, but a picture of an empty store at the QVB on a Friday lunchtime does not make an investment thesis. Maybe investors and watchers of the program should go out and have a look at their own Lavisa store and see what's happening.
Okay, I got one for you on that, Henry. My local shopping center. My daughter went in on Sunday. She loves Lavisa stuff. She didn't buy anything. I was shocked. She had her own money, so maybe that had something to do with it. But she went in and came out because she didn't want to spend her money now. Could be just a story of one, but anyhow.
Yeah,
Andrew.
No, well, there you go. You got to extrapolate those sorts of...
Wasn't busy either. There's one pretty close to our office here. I was out yesterday, walked by it. I think there was one person in it. I mean, again, who shops at Levisa in the middle of a workday. But the point is, Andrew, is that we've seen a lot of downgrades coming from a lot of other retailers. Myers' share price was hit particularly hard yesterday, down another 3.25%. There's a lot of nervousness out there about consumers. If you've got to pay your mortgage and your variable rate is going to go up to about a 5% fixed rate, round about there, I mean, you've got to pull back on spending something. So what will you be looking for in this result come Thursday, the 24th of August from Levisa that would give you confidence in this story going forward?
If I can just take it back a couple of steps, I guess the key thing, you're right, like the average family household is now spending $400 a week after tax income servicing debt. So the money's got to come from somewhere, and pulling back on your gym memberships, on your Netflix, your Lavisas, sure. To the Macquarie note, I agree with Henry. Going from 35 back to where are they, 20 odd. Why were they at 35 to begin with? The consensus is $25, and here we are at the moment around 21. So arguably there's still some upside. My 26 years in doing this, Nadine, hard to believe, I know. The share market is a 12 to 18 month forward-looking beast. You don't have to be a rocket scientist to figure out the consumer is under pressure. I think the job now is to figure out when they'll start coming under less pressure. In other words, when will interest rates top out, stabilise, and then actually start coming back off the boil? And the answer to that question for me is probably another 9-12 months. So consumers might be under a little bit of pressure for a wee bit longer, but there's actually opportunity in this sector if you're willing to look through the noise. I don't think it's a buy yet. It's absolutely a pretty solid hold. Dangerous buying any company coming into profit reporting season, but I'm pretty interested in this one, and I agree with Henry. I think Macquarie has gone too cautious too early on this one. Any weakness over the next couple of weeks, in particular on that result, and it's definitely one I'm interested in particular, a 90% return on shareholders' funds and management buying stock. I'm interested, but it is a hold.
Yeah, got it. Look, it's a really interesting one. And yeah, a lot of the conversations that I've been having with folks is about, when do you start stepping into beaten down retailers? But you're saying strategically, both of you, just give me the thumbs up, that you would wait for this result to come through. Thursday the 24th, not long to wait. So even though it might look as if it's a bargain today, you might be able to get it on sale further. Got it.
2 thumbs.
Okay. Hey, I'm going to be cheeky because I know CBA was the natural pick for stock of the day. Buy, hold, sell stock of the day if it was CBA, Andrew.
It's a hold. It's fully priced, Nadine. Yeah. It's very expensive. It's a quality business, but paying 15% above consensus for quality, it's a hold. It's very hard to say sell, but it's definitely not a buy.
And that's why I didn't pick it as stock of the day, because most of us own it in some way, shape, or form. And I'm told over and over that it's rare for people to really sell it. So would you buy, hold, or sell CBA off the back of this result today? That's what this show's about.
Exactly.
Yeah.
Hold.
Hold.
For me, it's a hold. Pretty solid result. The machine cranks up the money. It just keeps rolling on.
I love to be proved right. Okay.